Good morning, good afternoon, good evening, depending on where you're at in the world. Today, I have a fun stream. I think even if you're a regular viewer of my live stream, I think you're going to learn a couple things today. Good morning, Steelhead. Good morning, Details, Home Inspections. Good to have you guys in here. We've been doing I know I haven't seen you guys in a couple weeks, but we've been looking at some remodel jobs where we really could have used your advice. We're going to use some of your advice today. Good morning, Mrs. Steinman. All right, I have a fun one. What do you guys think of my intro? We're going to be talking about property investing today and a very underutilized loan program for property investors that should give you some relief when it comes to having to prove your income. Okay, we're going to talk about that, but it got me thinking, what am I going to do for my intro? I don't know why the clock's so big now, but dressed Rose up. Rose isn't here with me this morning. She was here last week. Dressed her up as the Monopoly Man on a real estate investing themed live stream. All right, I have some big interest rate news, which we're going to cover in just a second. I'm going to let people trickle in here. Before we do that, let's cover our market statistics. Pretty interesting today. For the last 10 years, shifts in the market seem to happen quickly. I don't know what's going on now. After the last Fed rate cut, I thought we were going to start a trend. Maybe that we'll see that at the start of next year. Maybe we'll see it at the next Fed meeting. But it seems like things are shifting at a reasonable pace. Okay. I don't see any signs to panic, but there are some things to notice. Okay. New listings. So every week, Gavin Huckins over at Berkshire Hathaway sends over his statistics. I don't even have to remind them. Every week, Friday night, I get these in my inbox. 210 new listings in Clark County, Southwest Washington. That's up 14%. Pending sales, 208. That's up 10%. Those are great numbers, especially for this time of year. We saw those inverted a little bit last week. So it's good to see that our inventory is still exceeding the demand. And with interest rates coming down, that's a really good sign. So we don't want to see is inventory issues and have this become a very strong seller's market as interest rates are coming down. Why? Anybody in chat want to tell me why we don't want to see values skyrocket as interest rates come down? Bonus question. Every time a real estate agent opens a lockbox on a home, that data is collected, and that's what we're looking at here. I did feel this last week and this week. Affordability, bam, Details got it. Affordability is two factors. It's interest rates and home values. And if I were a betting man, and I am, I'd bet that we're going to see home affordability improve over the next 18 months. Now, what happens after that, it's going to be really hard to tell. How long are interest rates going to be low? How low will they go? That'll all impact home pricing. But if we can see a neutral or a slight buyer's market going into a lower interest rate environment, we're going to get some relief on home affordability. And I can tell you, most every American in this country needs some relief on affordability in general, and home affordability is a big part of that. The price of beef is through the roof. Sirloin steaks at Costco for like 4 mediocre looking steaks for $60 this week. So people need, and this trickles down to non-homeowners, trickles down to renters. We're going to talk about that here in a minute. So home affordability, big issue, and we're going to be watching it closely, and hopefully we see some relief over the next year. 2026 could be the year of relief when it comes to real estate and home affordability. Lockbox activity in the state of Oregon down 6.5%, down 8% in Washington. It did really slow down this week. The number of incoming calls for pre-approvals on my desk dramatically slowed down. Nothing to panic about. This is definitely seasonality. And we're right in line, if not, we're right in line with where we were last year. So it'll be interesting to see what this number does as we get closer to the holidays, and what happens with this number after interest rates, after the Feds meet at the end of the month. All right, now for the moment you've all been waiting for, interest rates. Out of nowhere, I wasn't expecting this until after the next Fed announcement. FHA broke 6%. We broke that threshold for the second time this year. The lowest it got was after the last Fed rate cut just a month ago, 5.95, 5.99 as of yesterday, 6.23 on our conventional loans, and 6.20 on our jumbo loans. So loan amounts over $818,000. Now, there's something to note here, because we've seen our jumbo loan pricing 10 basis points, or tenth of a percent lower in rate for a while now than compared to conventional. Meaning, for the first time in 20 some years that I've been doing mortgages, we see jumbo interest rates lower than conforming interest rates. And that told me that conforming interest rates are artificially high. Conforming interest rates are Fannie, Freddie. Jumbo loans are generally from private investors, okay? Like Wells Fargo and those type of banks. Now, the fact that interest rates between conventional and jumbo are getting closer to the same, it tells me that we're starting to see the ceiling pop a little bit on interest rates. So I think this is all very, very good news, and we're going to be glued to the My Mortgage Hound YouTube channel for the next 2 weeks, watching what rates do as we approach that Fed announcement. Now, Mortgage News Daily is my go-to website, and if you guys want easy to digest articles, here you go. Mortgage rates quickly approaching long-term lows. Despite a stark absence of any truly inspiring event. So like I said, kind of out of nowhere, interest rates have managed to put in 2 fairly serious days of movement. So yeah, gonna be fun to watch. Never a dull moment on the My Mortgage Hound live stream. All right. I told you guys, even if you're regular viewers of my show, you should learn a couple things today. We're gonna start. Kay Hauser, one of my favorite real estate agents. She works very closely with coworker Ryan McCracken. She has a brand new listing with a view of Vancouver Lake. Now, we did a Vancouver Lake home last week, so it'll be fun to compare. We are going to start the live stream at 8801 Northwest Lakecrest Avenue in Vancouver, 98665. I'm going to call this Lakeshore area. 5 beds, 3 baths, 3,884 square feet, listed at $948,900 on almost a half acre, built in 1959. Huge home, kind of vintage. I love the 1959 era homes, with hopefully a view of Vancouver Lake. Now, I haven't looked at these pictures yet, so we'll see. Sitting on almost a half acre. Let's see what Kay has to say. Perched above Vancouver Lake in the Lakeshore Hills neighborhood, this nearly 4,000 square foot home captures the essence of classic Pacific Northwest living. Built in 1959, GIS shows 1957. Way to go, Kay. I love that you put that in here, that there's a discrepancy between your description and the GIS. That answers that question if it was going to pop up before it even does. This true mid-century modern home has been cherished by one family for nearly 7 decades. A true testament to its craftsmanship, warmth, and enduring charm. Inside, vaulted cedar ceilings, 3 fireplaces, and original lighting evoke a welcoming, nostalgic charm. The spacious and flexible layout offers a main level primary and guest room plus 3 bedrooms, a full second kitchen, and large living area below, ideal for multi-generational living or guest quarters. Decks and picture windows frame breathtaking lake views, while top-rated school shopping are just minutes away. All right. Excellent description. Let's look at some pictures. First of all, very cool driveway, right? Wrap around your house, lots of windows. Love the mature landscaping, fairly low maintenance, not a huge lawn. A lot of times when I see a half acre, I'm like, I'm gonna have to do a lot of yard work, right? A lot of, gonna need a riding lawnmower. Yes, great curb appeal. Yeah, very cool lot. I like the way it's landscaped. Retaining wall, kind of a cool old rock retaining wall. Concrete steps going down to this area. You could put a fire pit down there if you wanted, I guess. Love the neighborhood, how far out the homes are spaced. Kind of private. Nice drone shot showing the lake. I haven't seen these pictures yet. How cool. Mid-century modern to the letter. Can't wait to see that fireplace. The ceiling is beautiful. Exposed beams, like the contrasted paint on the walls. Huge windows. Not sure about these curtains. That might be something Mrs. Diamond would want to address, but love it. Built-in cabinets back here. Hopefully we get a better look. There's the fireplace. Love how it's the whole wall. A lot of times these fireplaces are dated. This one is not. I mean, it's beautiful. You can tell that one family has lived in this home for 7 decades when you look at the wall. Those pictures hung there for 70 years. You can see. Okay. Like the door out to the back deck. Looks like hardwoods, possibly original in the kitchen. Okay, cedar deck. There's your huge breakfast nook. So these cabinets look like maybe late 80s, early 90s kitchen remodel. They don't bother me. They're going to bother Mrs. Diamond. She's going to want to either paint them or replace them. But man, think of what you could do if you really wanted to make this a modern looking kitchen or bring it up to date. Okay, living room. Love the built-ins, huge windows. Those are hardwood, better to redo the floors. Do you mean details refinish the floors? What a cool room. Again, a huge fireplace. Okay, bedroom number 1. This is our primary. Is that in the bedroom? No. I don't believe so. So primary, and I believe this must be a separate office. Where in the world is Carmen Sandiego? That's a lot of maps. Sorry if I slurped my coffee in your ear. Okay, another fireplace. Kind of a bonus room. There's that second kitchen. So multi-generational, could be a ADU. This looks original. I want to touch it. Mrs. Steinman would rip it out. I want to touch it. I think it looks cool just the way it is. Turn this into like a game room, pool table. Okay, upstairs, this must be bedroom number 2 or 3. Look at these built-ins. How cool is that? What do you guys think of the wood paneling? I do see baseboard heating, not my favorite. Now, details and steelhead. I see baseboard heater here and a register for forced air. What does that tell me? Does it tell me that maybe they added, I saw an air conditioner outside, so do you think that maybe they added forced air or extra heat for this? It's an older heater. I'm not sure what's going on here. But the built-ins are super cool. Gas furnace added later. Okay. Is it easy? Would you just remove the electric heaters then? Why do you think they're still there? I really like this house, just like the one last week. You can come in here and really, this is a lot less of a remodel or updating than the one last week, but super cool. Love the huge driveway. Interesting single car garage. Man, what a cool place. Okay. Don't worry, we're going to get to the exciting property investor stuff next. But we're going to stay on my theme that I've had on this channel for about 6 months now. It's a 2-1 temporary buy down all day long. If I'm going to use this as a primary residence, purchase price $948,900. If we put 20% down and just did a conventional loan, our loan amount would be $759,120. Now there are many ways to finance this home. For me, if I were to sell my home, coming in with $200,000 sounds reasonable, but you could do more. But keep in mind, for every, and this is if you're taking notes, this is a good thing to know. It's a formula I like to use. For every $10,000 in loan amount, it's going to impact my payment roughly $60 a month. So for every $100,000 more I bring to the table as far as a down payment goes, it's going to impact my payment roughly $600 a month. Or if I'm asking the seller to reduce the price, I'm only saving $60 for every $10,000 that the seller reduces. So not a great way to leverage funds. I'd rather keep any extra money I have, bring in the $200,000. I'm going to show you the 2-1 temporary buy down. Interest rates, according to Mortgage News Daily, if you just joining us, we hit some long-term lows, quickly approaching long-term lows. I might change the title of this stream to 6.23 on conforming. If we look at a breakdown of that payment, $46.64 for principal and interest, $761 for property taxes, $100 a month approximately for homeowners insurance, bringing our total payment to $55.25. Now, if that payment is something you can qualify for, you can afford, but it still scares you, makes you feel a little uncomfortable, there is a loan feature that can be added on to almost any mortgage out there, and it's called a 2-1 temporary buy down. If we were to ask the sellers to pay for a 2-1 temporary buy down, it would cost the sellers $17,040. So So that's the cost, $17,040, and here's the contributions from the sellers paying that cost for us. So under 20 grand a month, if we were to ask them to reduce the price by 20 grand a month, we're going to save about $120, $110, somewhere in there. Instead, we're going to ask them to pay for our 2-1 temporary buy down, and what that does is for year one, it buys our interest rate down by 2%. So for the first 12 payments, we're going to be paying 4.23 for our interest rate, bringing our payment down to $45.86, saving us $938 a month for the first 12 months. So instead of $120 a month for the life of the loan, if we were to ask them to reduce the sales price, I can save $938 a month for the first 12 months. For the second 12 months, the interest rate's reduced by 1% to 1 temporary buy down. Interest rate would be 5.23. Our payment in year two would go up to $5,043, saving us $481 a month for the second year. And then years 3 through 30, we're at the full payment. So it's still a 30-year fix. We just have an introductory rate for the first 2 years. And refinancing is never guaranteed, but there is a very good probability that we will be refinancing somewhere, hopefully in the low fives, during that first 3 years. So we can lock in that lower payment. You may never see a mortgage statement with this payment on it. Okay, never guaranteed, but I got a feeling. All right, home number one, 2-1 temporary buy down. Great comparison to last week's Vancouver Lake home. I really like that one too. It'd be hard to choose between the two. If you missed it, go back and watch last Saturday's stream. Okay. Everyone having a good start to their weekend. Going to a Beavers football game tonight. Very excited. Never been to Reeser Stadium. I'm wearing my orange plaid flannel. Okay. We're switching gears. For all my real estate investors, I know there's a few of you in the chat this morning. You may or may not know about this program. We are going to 302 3rd Street in Woodland, Washington. This is a fourplex. So 6 bedrooms, 4 baths, 3,000 square feet. Built in 1971. Listed by Caden. Let's see what Caden has to say. Right next to Horseshoe Lake, right off of I-5. Very convenient location, especially for a rental. Seems like that would be a good rental area. Modern low maintenance fourplex in the heart of Woodland with strong income and future development potential. I wonder what that means, future development potential. Beautifully remodeled with modern finishes, efficient systems, and durable metal roof. Each unit is leased and performing, generating $66.45 a month with minimal expenses. Guys, these are both the last house and this house tick all the boxes for descriptions, okay? It tells me right up front what the current income is on this property, which is going to be very important when we look at numbers. Located as a short walk to Horseshoe Lake Park and under 20 minutes to Vancouver. City pre-consult outlines a path for additional units on the lot. Reliable income, design quality, and expansion potential in one of Southwest Washington's most promising growth markets. Buyer to verify all information and future use potential. Please do not disturb tenants. Interior showings after accepted offer. Okay, great description. Let's take a look at some pictures. Interesting looking fourplex. Parking spots. Paint looks good, siding looks good. Yeah, updated. Vinyl plank flooring, nice millwork. Painted cabinets to the ceiling. I mean, these look nice. Stainless steel appliances, galley style kitchen, tile backsplash to the cabinets, under the mount sink, quartz countertops. I see a wall heater there, bedroom number 1, so we're dealing with electric heat. Very clean bathroom. Living room. Okay, so there's all the hot water heaters. It's interesting, there's 5 hot water heaters for 4 units. This looks like shared utility room. Okay. Probably the fits for the laundry room. Good call. See details? We need you here on every episode. All right. By the way, Brian Ross, the owner of Details Home Inspection, came on the live stream a few weeks ago. So go back and watch that one. We're going to bring him back on. Probably may come every couple months, maybe every other month to come on, answer all of your home inspector questions. Okay. So qualifying for, and I've been working with property investors for 2 decades. There's nothing to be afraid of for qualifying for a rental property. But it can be overwhelming documenting your income and your assets and your reserves. Okay, a lot of times you're going to need reserves. So how many months of payments do you have in a liquid account? A lot of times property investors have complicated tax returns, especially if they already own real estate. Sometimes it's mixed use. Sometimes they own residential real estate for investment. Sometimes they own a combination of that and commercial. A lot of times they're self-employed, and you should never be, if you're working with a good solid mortgage team, mortgage loan originator like myself and my team, or the other originators in my office, you really don't have to worry. They're going to get you taken care of, get everything, all the documentation up front. There's not going to be a lot of surprises, but it still can be overwhelming. So if you want to avoid all of that, there's a program that not a lot of people are aware of. And it's called, it has a very unsexy name. It's called DSCR, and that stands for Debt Servicing Coverage Ratio. So instead of qualifying to buy this property with your income, we're going to qualify the property's income. Meaning I do not need your tax returns, your pay stubs, your W-2s, your P&Ls. I don't need your business tax returns, your K-1s, your Schedule Rs, all that paperwork, I don't need. All I need is a credit score and proof of your down payment. That's all I need from you. From the property, we're going to have the property appraised, and we're going to have the appraiser do what's called a rent schedule, where they're going to tell us how much rental income that property is going to produce. Along with the lease agreements, and you don't have to have the lease agreements, but if you have both, we're going to take the lesser of those 2 numbers. And as long as that payment is covering, the income from that property is covering the payment, that's all we need. Doesn't even need to cover the whole payment. If it covers 90, 95%, 100% would be great, 115% would be even better. That's all we need. Now, things like how much of a percentage of the payment that the rental income is covering and your credit score is going to affect your interest rate. But I've done these where the interest rate's the same as a conforming interest rate. All right, so let's break this down. I know it's early to be talking about numbers like this. $1,150,000 is our purchase price. 25% down in this scenario. Now you can get away with 20% down on these debt servicing loans, but I really like 25% down. That would make our loan amount $862. We can go up to a $3.5 million loan amount on this program. Interest rate 6.75. That's kind of where they're at. Now you can get that interest rate down lower. So if you are interested in something like this and you want a one-on-one conversation with me, there's a link in my description here to schedule a call with me. You can call me anytime, email me. All my information's in the description and on my website, loansbycody.com. Now, I might be getting too in the weeds here, but who remembers prepayment penalties? Prepayment penalties were big pre-market crash in 04, 05, 06, 07. And a prepayment penalty means if you sell the property or pay off the loan within the first X amount of years, typically 2 or 3, you have to pay a penalty to the lender for paying that loan off early. Now the way I have this set up here has no prepayment penalty, but if you're confident you're going to own this property for a couple of years, you can add a prepayment penalty to lower the interest rate. So something to keep in mind. The interest rate can vary quite a bit depending on how you set this up. We're going to use 6.75 for today. Break down a payment on this property, $55.94, $748 for property taxes. I had to kind of trust Zillow on this. I don't know if that number's accurate, so we need to do some due diligence there. I'm guessing $150 for homeowners insurance. Total payment $64.92. Now if we go back to our description here, $64.45 a month in rental income. So our projected rental income, according to that description, is more than covering our payment. So no need for income tax returns. We're going to use the income on the property. Now there is an interest-only option. If you are a very seasoned property investor and you want to maximize your cash flow, there is an interest-only option. Interest rate, again, it's going to vary a little bit, probably a little bit higher than 6.75. In fact, let's adjust it on the fly here. We're going to bump that interest rate up slightly. You're probably looking more like 6.99. But again, you can bring that down with prepayment penalties, a good credit score. So doing the interest only, it drops our payment to $5,922, saving us an additional $570 a month. So if that's something you were interested in, that is available. So we're seeing things we haven't seen in a long, long time, prepayment penalty, interest-only loans. But this is what those type of loan features are meant for, is somebody that's buying a place like this. Oh boy, that was a lot. Who's with me? Well, let me switch my screen here, get back caught up on chat. Okay. I got one more. If you're like, man, I really think that's interesting. I think that is a great way for me to finance a rental property, but I can't afford a fourplex for over $1 million. Diana Rutherford, who's also been on the live stream on the Realtor Spotlight, has a new listing in Carson. Now, I know a lot of you, Carson might be too far out for an investment property, but this will give you an idea of what a entry-level investment property looks like. All right, let's answer this question. Can you put a HELOC on a property with that loan program? I don't see why not. The first doesn't care. The bigger question is getting a home equity line on an investment property, which you can do all day long. Okay. You're going to pay a little bit more, but HELOCs are typically interest only, or not interest only, but adjustable monthly and interest only, depending on how you set it up. But what a great time to have a home equity line if you think interest rates are going to be improving over the next few years. Let me ask you this, Steelhead. Are you talking about if you already have this program on a house and you want to pull cash out later on, or are you wanting to do a second mortgage alongside this, a purchase money home equity line, also referred to as a piggyback home equity line? That, I don't see why not. but you're going to be capped still at that 20 or 25%. I would have to do some research to see if you can go over that with a home equity line, but I'm thinking you can't. And that's a CLTV versus LTV question. So I will bring that up on next Saturday's live stream. I think that's a great question. In fact, maybe we'll look at some piggyback loans next week. In fact, we'll do that. We'll compare, because FHA is great right now, 5.99. For a long time before the market shifted, I'd find programs that would keep people from having to use FHA, but FHA, the pricing on it's so good right now that it makes a lot of sense. The reason you'd want to use a home equity line on a purchase, a piggyback where you have a first and a second, is to avoid mortgage insurance. So I don't really see a benefit to using a piggyback alongside this debt servicing loan. But if I'm wanting to put 5 or 10% down, wanting to avoid mortgage insurance, I can do an 80% first and a 10 or 15% second, 80, 10, 10. Man, Marty McFly, fire up the DeLorean. We're going back to the future, okay? Talking about things like prepayment penalties, 80, 10, 10, and piggyback HELOCs. But that's how you use it. So next week, I don't think that the math's going to pencil. And if you've ever done business with me, when it comes to questions like, oh, should I buy down my interest rate? Should I use FHA? My opinion doesn't matter. Math never lies. So we'll do that next week. We'll compare an FHA with mortgage insurance, a 5% down with mortgage insurance, and then 80, 10, 10 or 80, 10, 15 to see what the payment would look like without mortgage insurance. Okay. I know it's early and we're going deep in a bunch of mortgage stuff, but this is important. This is all about building confidence in what you're doing. Okay. 12 Short Run Road in Carson, Washington, 3 beds, 2 baths, 1,500 square feet, sitting on a third of an acre, built in 1952. Diana Rutherford says, investor alert, discover the opportunity to make this 1,500 square foot bungalow your own, nestled on a spacious third acre corner lot in the heart of Carson, surrounded by natural beauty and territorial views. This property offers a peaceful retreat with room to grow. If you've been searching for a home with good bones, plenty of potential, and a setting that captures the essence of the Pacific Northwest, this is it. Bring your tools, your vision, and your dreams. This bungalow is ready for its next chapter. Right next to Carson Church of the Nazarene. If you are unfamiliar with where Carson is, it's out in the gorge, east of town here, east of Stevenson. A really cool spot, especially if you like turkeys. There's a ton of turkeys out here. But there's Carson. Okay. Same program. The difference is we're going for $1.1 million to $375,000. 25% down, our loan amount would be $281,250. Interest rate, same 6.75. Again, that's going to fluctuate depending on the details. Get in touch with me if you want a custom quote. Breakdown of payment. Property taxes $296. Homeowners insurance around $100 a month. Total payment $2,220 a month. Interest only doesn't look right. Let me take a quick look at it, guys. So on this property, we would need the appraisal to show rental income, projected rental income on a rent schedule of around $2,200 a month. Is that viable on this property in Carson? I don't know. I'm not familiar with the rental market out there, but you can take the same analysis. On a 1,500 square foot, one level on a third lot in Philida, all day long. All day long, $2,200 a month at least. If you wanted to go interest only, you would save $185 a month at $2,034. 25% down without asking the sellers to contribute anything towards closing costs, $102,000 out of pocket. There you go. We covered a buttload on this morning's stream. Thank you everybody for being here. Like, subscribe, get in touch with me. If you guys want to know more, if you want me to come present this to your real estate office or to your team, or you want just to go have a cup of coffee and pick my brain, reach out to me. I'm a very easy to get a hold of guy. The whole point of the live stream here is to build your confidence, and the only way to take that to the next level is to reach out to me. All my info's in the description. Thank you to our partners, Details Home Inspections, Diana Rutherford, Gavin Huckins, Troy Jensen, Kay Hauser. Who am I forgetting? Anybody else that's been on the channel. I'm bringing back the real estate spotlight. Agents are hard to get a hold of on a Saturday morning. They're usually busy doing open houses, but Jamie was going to come on, but he is out of town, so hopefully he's the next one on. If you guys know of anybody that would be a great fit to come on and do a realtor spotlight or insurance spotlight or something like that, let me know. You guys go enjoy your Saturday. Go Beavers. Hopefully they can break their losing streak, and we'll see you guys back here next Saturday. Bye, everybody.